Hello, this is Brent Reeves, Communications Tax Guy, and I am going to talk to you today about tax on tax. Now, if you're like most people right now, you're saying, what is tax on tax and why do I need to know about tax on tax? However, if you're in the communications industry, you're probably very familiar with the term, but I guess the question is, are you doing it right? So, to start off with, I want to just talk a little bit about what tax on tax is. Tax on tax is not a specific separate tax. It is actually just a methodology in which you include certain taxes that you collect in the base for other taxes that you need to pay. Now, these are things such as gross receipts taxes, excise taxes. Things of that nature are often considered taxes that you collect that are actually your revenue, and then you must apply taxes on top of those taxes in order to come up with the right amounts that you need to remit for things like gross receipts taxes and excise taxes. So, a little bit about it. A lot of people ask me, well, it makes absolutely no sense. What's the justification for tax on tax? I need to understand that a little bit better. So I'm just going to give you a little bit of basics here. The concept of tax on tax is that taxes themselves and fees and surcharges are broken out into two basic types. Provider-based taxes, which is the taxes that the government says, this is your tax as a provider, as a consumer, or excuse me, as a provider or a carrier, meaning it's just the normal cost of doing business for you. So just because we allow you to pass it through and collect it from the end user, or you at least have the option to pass it through and collect it from the end user, it's still your tax, and therefore any revenue that you get based on collecting those taxes is really just considered the price of your service. So provider-based taxes, once again, your taxes that are imposed upon you that would typically be considered taxes that are included in the base. Consumer-based taxes. All right, consumer-based taxes are taxes the government says, okay, these are taxes that are applied directly to the consumer. However, it's not realistic for the government to go around to all these consumers of services and say, you need to remit me your taxes for this product to, thousands upon millions of returns to the government at pennies apiece. It's not realistic. So what they say is, okay, we're going to mandate that you collect these taxes from the consumer and then remit those back to the government on their behalf, so to speak. So consumer-based taxes are typically not included in the base for tax on tax. However, there are plenty of exceptions, as there are with all tax rules. State by state may have different definitions of what exactly is a consumer-based tax. One that comes to mind is, I believe Colorado has a different definition of consumer-based tax, where there are some taxes that are consumer-based that are collected in the base for tax on tax. Okay, so the next question is, okay, well, how am I supposed to know? Well, the first question is, are you located in any of the streamlined sales tax states? I want to say there's about 24 states, just remembering that have adopted streamlined sales tax. And if you are in one of those states, then your government has a better indication, a better definition of exactly what taxes need to be included in a base for tax on tax and what taxes are not. So in those states, it's a little bit easier. The rest of the states, unfortunately, it's a little bit of a wild west. So it's very important that you understand this and obviously know how to collect them, how to remit them, how to calculate them more than anything else. I'll give you just an example of why this is important. New York has, I believe, excise taxes as well as gross receipts taxes. So if you do just a typical VoIP transaction, and this is just for example purposes, it could be taxed in the 26-27% rate when you put all the taxes that are applicable to a VoIP service in there. But when you go through and recalculate that and use the correct taxes associated with your gross receipts and your excise taxes, the blended rate actually ends up being, or the effective rate I should say, actually ends up being more like about 30 to 31%. So you're talking about a 3.5% gap. So if you're not doing it correct, you could potentially leave yourself exposure up to 1, maybe even 2%. Now, why is that important? Because even if you don't collect it correctly from your consumer, you're ultimately responsible for it as the provider. So if you don't perform tax on tax correctly, you're responsible for it regardless of whether you got it from your consumer. And then just try to go back to your consumer and say, oh, I got to adjust your bill by 1% because I didn't do this right all this time. I doubt that's going to happen, and most providers would choose to eat that, which could be a huge, huge cost if you do a tremendous amount of revenue. Now, that's a very, very detailed subject, so I'm going to break it up into a couple parts. The next part, we will talk a little bit more about examples of taxes like sales tax, right-of-way fees, franchise fees, FUSF fees, 911 taxes, and discuss if ever some of these would be applicable to attributable to the base to perform a tax on tax calculation. Now, as always, I'm here to just kind of give you a little bit of insight into the things that you may run across that could cause you trouble in the marketplace from a taxation standpoint, could cause you trouble with auditors. As always, I recommend that you talk to your tax professional, tax attorney, tax accountant in order to understand this correctly. And if you don't want to wait till the second installment when we talk a little bit more in detail and you'd like to learn more about tax on tax, we've got a great resource on our website, SureTax.com, SureTax.com. Go to our resources tab and there's a whole presentation that gives a lot of detail on tax on tax. And I believe the presentation is labeled Hall of Mirrors, which is appropriately named. So if you'll take a look at the website and then visit me again when we go through a little bit more detail on tax. Thank you very much.